Here in West Africa, Benin Republic plans to spend as much as $15 billion over the next 5 years on agriculture, tourism and infrastructure projects. The country plans to raise the funds by boosting tax revenue and borrowing on local and regional markets. The government of Nigeria's closest neighbor will finance about 40% of that amount from this government side, while the private sector will be tapped to fund the balance of 60%. The 5-year economic revival program from Benin includes building a new international airport near Cotonou, increased investment in higher education and digital technology, and boosting tourism by improving the country's various national parks. Zambia has scrapped a plan to impose 7.5% import duty on copper concentrates beginning from January the 1st. Operators in the industry have complained that the planned tax would have put a spanner in the global copper supply chain by forcing neighboring Democratic Republic of Congo to send surplus mine output elsewhere. Sticking our nose in the business of commodities, oil prices slipped. Interpretation trading today dragged down by unexpected rise in the U.S. crude inventories. It's got the recount last week and moves by Libya to boost output over the next few months. The news came out 24 hours ago that 2 of those Libyan oil fields are back in production. So let's get a bit of a sense of this. Nosike Nwajide is a research analyst at Financial Derivatives in Lagos. He's live here in the studio. Nosike, good afternoon. Thanks for coming.
Good afternoon.
Yeah, everybody's have their eyes tomorrow on the U.S. data, isn't it? Do you think that will boost the market for Christmas, or is going to dampen everybody's mood for the long Christmas holiday?
I hate to be a bringer of bad news, but if going by last week's rise in the recount by 12 to 510, if we consider that the slight rise in oil prices has incentivized higher cost shale oil production by the U.S., we should see oil recounts rise by, we don't know how much, but we expect to rise next week, by this Friday.
The prices I'm looking at here, WTI around $52, $23 a barrel. Do you think this is in anticipation of the news coming out of the U.S., or is just a general market sentiment that, look, traders will have to go on Christmas, everybody just feel, well, I think we've had some nice time since the OPEC meeting in Vienna, let's pack things up, come back in January?
It's a number of things. They only managed to break that $50 barrier on the news that OPEC and non-OPEC countries have reached an agreement to cut production by about 1.8 million barrels starting in January. What might be a slight setback to that is Libyan production. Libya have finally managed to capture oil fields and export terminals, and they have the capacity to increase production by another 1 million barrels per day, even if that's unlikely given the political uncertainty in the country and not many people willing to invest the amount of money to boost production up to that amount by, say, early Q1 next year. So we see by Christmas, by the weekend, the recount, if it comes out positive, if there's an increase in recount, the US oil prices should come in, say, not higher than 53.
No higher than 53, but it looks like at least we've passed the $50 threshold and we've locked things there.
Yes.
Is that some news we can hold on to?
Yeah, for the time being. It remains to be seen. I mean, markets are optimistic that there'll be compliance to the deal. I mean, this is one time that the non-OPEC producers, Russia leading them, Russia invested so much in securing the deal, and the market expects it to comply to the at least early on, and should see in Q1 oil might get to above $60 a barrel.
Are you looking at 16 in January?
Well,
you think so?
Yes.
If we look at other story like from Goldman Sachs, that's also looking at saying, well, 60 perhaps looks like a new year price level for crude.
Indeed, by beginning of January, they begin to comply. The markets will react, I think, very strongly. And boost it it may not stay at 60. It may just break that $60 barrier briefly, come back. But the trend over next year might see it get to as high as 60, 65.
Some folks are looking at 70.
Yes, I mean, that's optimistic. I like to be.
So you think the environment is right unless something unusual happens?
Yes.
Do you think, very quickly therefore, that we've pushed put behind us the days of $43 a barrel, you think we're done with the high point of the market's upset of 2014-2015?
Well, in 2014-2015, the major cause in the drop in the price of oil was the shale oil producers in the U.S. And these guys are incentivized by higher prices. And if prices go up to 60, you will see U.S. rig counts spiking upwards, production, and it will be interesting to see how everything plays out. But we see for the Q1, at least prices getting to 60 before eventually we'll see how the U.S. producers react.
The dynamics sometimes could be very, very, very tough. You think this is all good news for Nigeria, there's no need to worry. Perhaps the only thing we need to worry about in the meantime is our production level.
Yes, there's been some news from the budget about the agreement with the oil companies to boost production to 2.2. I mean, that's a really big incentive. On one hand, increasing production increases government revenues, increases forex supplies, and adds to external reserves. On the other hand, increased price of crude oil, because we still import refined petroleum products, that could impact the price of the landing cost of PMS. That has the impact of increased cost of PMS.
Of retail prices here, domestically speaking.
Yes, and that could be.
But the thing where we'll then, but of course we'll have the dollar to
to offset,
to bridge it.
Yes,
isn't it? So for now, the government can't really do much. In terms of where money is flowing around the world, in terms of new investments coming through, do you think 2017, based on higher oil prices, do you think international oil firms are likely to bring more money into the Nigerian environment to explore new fields and perhaps rev up on activities where they've kind of slow down, as it were?
A lot would depend on the passing of the petroleum industry bill. Much of it also depends on resolving the conflict in the Niger Delta, and investors knowing that they are coming to invest and their investments are safe and secure, and issues of force majeure and all of that don't arise in the short to medium term.
We still have about 3 force majeure to speak. We still have for Kairos, Kwaibo, and another one that we haven't really resolved.
Yeah, and that's a huge deterrent to potential investors. PIB needs to be resolved really soon, within the next quarter. If they could do that, then send a positive signal.
Nosike, thank you very much for coming through much day from Financial Derivatives. Unemployment rate in Southern African nation of Mauritius jumps to 7.6% in the third quarter. That's from 7.4% a year ago. According to the Statistics Office, employment of Mauritians is estimated at 536,300 at the end of September this year, compared to 536,500 in the third quarter of 2015 and 537,000 in the second quarter of 2016. That's about all for today on Business Incorporated. I am Bosin Mavayo. Thank you for watching, and I'll see you again.